Today I'm gonna go through how I made I think it was $77 or $80 today with my day trading strategy, and I'm just gonna give a nice walkthrough for it. The first thing is daily bias. Daily bias helps me determine where I want to target for the day, which range, if it wants to be a long or if it wants to be a short. Next thing I target, or at least mark, is a liquidity sweep. Liquidity sweep is just a high or a low getting taken out. Usually that's where the market tends to reverse because it takes the orders or the liquidity from the buyers and the sellers, and the market works off that most of the time. Next is a break of structure. It's pretty self-explanatory. Break of structure just supports where the price is going. So if you get a liquidity sweep and then it breaks structure to the side where you want it to go, it pretty much just supports the bias. Lastly is a fair value gap. A fair value gap is where the price or the market creates an imbalance and usually tends to come back, retrace into it, and then react off of it and extend towards your bias. So if you work off these four things, you're going to have a very good strategy. All you got to do is be patient and consistent with it and have a correct daily bias majority of the time. And, of course, use good risk management. Anyway, let's just get into the strategy and let's get into how I put it all together. There's probably going to be multiple parts to this because it's hard to explain everything in one video. So today I'll just be going over like daily bias, maybe some liquidity sweeps, and probably just the trade I took today and how I use that to help. All right, so we're going to start off on the 4-hour time frame. So all of this was much predicted if you go back into the previous videos here. All this is all sell side liquidity. It was all unprotected. Never did one candle sweep out any of this until this news day. So this was anticipated. And then I took out these relatively equal lows, including this sell side. So this was all major sell side liquidity. Let me get rid of these so we could view it more clear. Anyway, this was sell side liquidity here, and it swept it, created this imbalance. If you were looking to go short, you could have played within here, but it completely got disrespected. And this got disrespected. Today's Friday, so this already got disrespected. So this was playing inside my bias because the price swept and then created the inversion fair value gap right here. And so I was like, okay, so this looks like it actually wants to go higher. Then we move into the 1 hour. And let me find market open. Today we had news. This was a news candle. At 8:30 we had news, NFP. And it was a very clear trading day, which is what I liked. This was market open. So my bias was already bullish. It was breaking structure to the upside, created the inverse fair value gap. The only issue was it swept these highs, so I was like, okay. And then it came down. And it came down into this 4-hour imbalance here. And this is the fair value gap I was talking about that really my strategy runs off of. The fair value gap is when there's an imbalance in the market where there's no... So here there's a lot of buy side, a lot of buyers in the market, but then there's no sellers. So it needs at least a rebalance. So it comes, it mitigates it, rebalances it, and then expands higher. And you'll see the market do this a whole lot of time. Okay, so after the expansion, this was already supporting. Once it came in, it went below the midpoint, but it didn't close under it. All that matters are these bodies, by the way. There's a really important fair value gap tip. All that matters is the bodies. If the candle wicks through, it's still a valid fair value gap. But the bodies, if the bodies close under, then the fair value gap is marked invalid and erase it off your chart. Anyway, so we got that 4-hour buy side fair value gap. So we were expecting to retrace, and the news retraced it perfectly for us. And so then people think, oh, what about this fair value gap here? Right? And that's a fair point. But that's why bias is so important. If you know the market wants to go up, then you're not going to be looking to short off of these fair value gaps. Yeah, you got a liquidity sweep. You got a fair value gap. You even got to break a structure. But you got to understand how the market works. When you know that the market wants to go up, after this whole move was just a liquidity sweep. It just went to sweep out these lows here. And it did. And now it's rallying higher. So it came, it rebalanced. You got to understand, this was a 4-hour retracement. We're in the hourly. This was a 4-hour retracement. Then you go into the lower time frame. 9 o'clock. This is 9:30 right here. Market open, right? I wasn't concerned with any of these fair value gaps to send a lower. It's more of a retracement tool. I had a feeling that okay, we came into the 4 hour imbalance we were working off of, and then I saw us starting to build back up here, and then market opened. And then I went into the 5 minute, and I saw, okay, we had a break of structure here. You can mark that out. And this is how simple it is. You got to break a structure. It wasn't a liquidity sweep, but it was a higher time frame PD array. It was the fair value gap. Remember, on the 4 hour this was the 4 hour fair value gap. We were planning on it coming in, retracing, and then going on bullish. So it was still within here. Let me just make this a nicer color. And I'll make this blue, right? So we went into the 5 minute. We had a break of structure. Market opened 5 minutes after. We had that break of structure. And then we were playing inside this fair value gap. And this is where I took my entry off of. Just like this, boom. And usually I wait till, wait. Was it at 9:40? Usually I wait till 10 before I enter, but I think this one was playing off it very well, so I did enter within 10 minutes after the market opened. I actually entered in around 9:55 when I saw it going up like this, and it was respecting, and see how it came in, it wicked through, but the bodies never closed. The bodies tell the story, not the wicks. So then I went long here, stops underneath this low. I could delete this now. And I targeted 492. I was trading on SPY. 492 was around here. Let me just make sure what risk to reward ratio that was. So here was the 5 minute fair value gap. I went long here. 492 was my sell. And I stop underneath this low. That was a 1 to 3. And that's how you find a great trading setup. Understanding the bias, understanding break of structure, how to enter in off of fair value gaps, and just overall the liquidity sweep and the PD arrays on the higher time frame are extremely important. Extremely important. And now market's still open. It's 3 o'clock New York time. Market's still open. And we're still rallying higher. Could have still been in that trade, taking more and more take profit. Here was my markers for NASDAQ. I didn't trade on NASDAQ, but I do mark out everything. And as you could see, it played out the same way. It came into this fair value gap. I had this high, and this high marked out. By the end of the day, I'm sure it will sweep out this high. You guys could check me on that at the end. But it did sweep out 2 of my take profit points. And if I wanted to find a way to enter this, we can go through it right now because I didn't look at NASDAQ at all today. I just mark it out pretty much. So NASDAQ came, swept all of this, but it kind of went lower. It played inside this imbalance. And here's another PD array that you guys could learn. This is considered an order block. An order block is the last down candle of the up move. Right here, that's an order block. It came into the order block because this was the last point where the orders were filled throughout all of this, right? But this is where orders were primarily filled on this down candle. Here's another one. Here's another one. This is a down candle before the up. Here's another one. And the market relates to these areas. Look, a fair value gap and an order block. So this is considered a unicorn setup. And so you could even take an entry off of this right here. Fair value gap and an order block. And what does it do? It goes up, goes higher. Anyway, NASDAQ was extremely influencing. So we had this was Thursday. So we had this 4 hour break of structure to the upside on the 4 hour. And market opened, came, retraced from the news imbalance. Remember, and look how perfect. I mean, this is how you know the market is an algorithm. The market's an algorithm. Look how perfect. It closes exactly above halfway point with the candle. The wicks fall, but the bodies show the story. So you see how the bodies can perfectly close on the halfway point because if it goes under, You really don't want to see it go under halfway point. Sometimes it does, but it's way more influencing when it's halfway like this. And although it broke structure and swept this liquidity here, I was looking for this retracement because it was just a 4-hour retracement, and we can find an entry now. 9:30 open right here, opened up strong. We can mark this out. It even created this fair value gap. I mean, it looked like NASDAQ was way easier to enter on, honestly. Came into the fair value gap, created this. Sorry, let me just change this color. Came into the fair value gap, reacted off of it, and flown up. You see how it relates to it? Taps in and flies away, but you could find a better entry probably on the 5-minute. Okay, perfect. Here we go. Right before, creates a high, break structure here. Creates this huge imbalance on the 5-minute. And you could probably just mark it from here to here. See where the equilibrium is of this range. And it's right here, right on this fair value gap. So that one was high confidence of getting related back to. But you could have also marked out this one. And this was like the one I took on ES. So you enter in off of this. And you could even go into the 1-minute. And you could look for more confluence to enter if you would like. Taps in. Does it break structure? No. But it creates this inverse. So you can take an entry off the inversion and a rally up. Even though it consolidates in here. Or this was price engineering liquidity. And it's actually crazy to see because when you study so much, when you study the market a lot, you see how the market is creating higher highs, and higher lows. And so it's weird because right now what I'm seeing is this is liquidity being made. And this is all in 1 minute. This is liquidity being made. This was liquidity being made. It got swept. And then this was liquidity before this whole down move. So pretty much what this down move did, it swept all of this liquidity, filled and mitigated this fair value gap, inversed here. This was a complete inversion, a beautiful one because I have a secret strategy. I'm not going to say yet, but I do have a secret strategy. I will teach it later on, but I've learned in the TJR 2024 mentorship actually. So I have learned that. And it's a very, very good strategy. And here it would work perfectly. Anyway, completed this inversion. And you could all do this with my regular using strategy. This is just another model. Inversion, fair value gap closes, taps back into it. And where does it go? It flies higher, flies. And now you're still rallying. And you could have taken that as the entry. And I'll just show you guys how to use proper risk management. You put it under the liquidity sweep. And you just target old highs. So here could have been take profit 1. Right? A 1 to 2. Not bad. And then these would have been my last ones. 1, 2, and 3. Leading it off with a 1 to 6. Good trade. And eventually we will tap that. Because that is the all-time high right now. So right now it's just retracing off of this sweep. These are all unprotected highs, so it was high confluence for me. Anyway, that's how I made a solid day, $80 day. And how I planned out, even though it was a news day, news passed. I waited for news to go, and then I entered. Here was the profits. Here, let me lower the brightness. This was on Robinhood. Don't trade on Robinhood. It sucks. $77. I was in class. And anybody could do this. I swear anybody could do this. And here was the position. From here, there was one. That was one contract. Oh, no. That was actually... Yeah, that was one contract I did. And then the other one I wrote to 492. Anyway, thank you. Have a good night. Good day. God bless.